You know, in a banking sector where every single basis point feels like a battleground, one bank just showed everyone how it's done. So, let's dive right into the Q2 2025 earnings report for United Community Banks and break down exactly what they did right.
Okay, so the headline number that got everyone's attention was 63 cents. That's their GAAP earnings per share, and it was a solid beat, about 3% higher than what analysts were forecasting. That's a really strong signal right out of the gate.
But here's where it gets really interesting. While the earnings looked great, their total revenue actually came in just a tiny bit under expectations. So, you gotta ask the question, right? How did United manage to grow the bottom line so well when the top line was just meh? Well, that's the story of operational excellence we're about to unpack.
To really get that story, we've got to deconstruct the performance. Let's look under the hood at the key drivers that actually powered this quarter.
And here is our first huge clue. And it's coming straight from the CFO Jefferson Harrelson. See, this quarter wasn't about some massive, flashy loan growth. No. It was about smart, disciplined management of their main funding source, their deposits. They controlled their costs like champs. And that fantastic deposit performance, it flows directly into the key metrics you're seeing right here. Their net interest margin, or NIM, which is basically the core measure of a bank's profitability, it expanded by an impressive 14 basis points, hitting 3.5%. You pair that with a lower efficiency ratio, which just means they're spending less money to make each dollar, and the data just paints a super clear picture of a very, very well-run machine.
But management wasn't just sitting back and playing defense on costs. Oh no, they were on offense. They made two really shrewd moves this quarter. First, in May, they closed their acquisition of American National Bank. Then, in June, they paid off some expensive debt. Let's look at exactly how those two moves created value.
And look, these weren't just random moves. The A&B acquisition immediately beefed up their low-cost deposit base, which gives them more fuel for future lending. At the same time, by redeeming those senior notes, they basically dodged a bullet, avoiding a rate that was about to jump to a painful 9%. This is just proactive balance sheet management, plain and simple.
So, that's how they delivered in Q2. But what about the future? What are they telling investors is coming next? Let's dig into management's strategic narrative and their forward guidance.
And they are absolutely signaling confidence. They're guiding for loan growth to pick back up to around 6% in the third quarter. They expect that net interest margin to expand even more by another 5 basis points or so. And get this, they're putting a full-year 2025 earnings target out there of around $2.50 a share. They're basically telling the market, hey, the good times are going to keep rolling. And this optimism, it isn't just an internal thing. The CEO, Len Harton, shared what he's hearing from his commercial clients, the folks on the ground. He said concerns over tariffs are starting to fade, and there's real excitement building around tax policy. That creates a really nice economic backdrop for the bank's growth plans. So the big question is, how are they going to capture all that growth? Well, their strategy has two parts. First, they're going out and aggressively recruiting top-tier banking talent to drive organic growth from within. And second, they're keeping their powder dry, looking for smart, disciplined M&A deals to scoop up smaller, high-performing banks that fit right into their footprint.
Now, a great quarter is one thing, but how does it really stack up against the competition? You have to put this performance into the context of the broader market to see the real story here.
And folks, this is the crucial point. Over the past month, while the main regional bank ETF, KRE, was basically flat, up just 1%, United Community Banks returned over 13.5%. This huge performance gap shows you the market is recognizing something special is happening here. This isn't just a case of a rising tide lifting all boats. This bank is dramatically outperforming its peers.
This strong performance, that clear strategic path, it all leads us to assign an outperform rating on the stock. So what does that actually mean for investors? Well, let's turn to the next call and explore a couple ways this whole story could play out from here.
So we ask the question, where is the strategic opportunity? We see two pretty plausible, hedge fund-style ideas that are based on the narrative management just laid out for us on the earnings call.
Okay, idea number one we're calling capital deployment arbitrage. The thesis is simple. UCB has excess capital, and they've publicly stated they're hungry for M&A. That makes them a prime candidate for a big, transformative deal.
The trade? You could look at a long call spread on UCB, betting on a stock pop from an acquisition announcement, and hedge it with a short position in the KRE ETF. You're betting on UCB's specific catalyst to drive performance, not the whole sector.
Idea number 2 is Navitas Unlocked. The thesis here is that UCB's high-growth equipment finance business called Navitas is kind of a hidden gem inside the company. It could be worth way more to a strategic buyer or even as a spin-off. So the trade idea is a long position in the common stock, just to capture the core bank's strength, but you pair it with some long-dated, out-of-the-money calls. Think of it like a lottery ticket on a deal that unlocks the hidden value of Navitas and forces a total re-rating of the entire company. So, whether it's through a major acquisition or unlocking that hidden value, United Community Banks has laid out a super clear story of proactive management and real outperformance. The key question for investors isn't if they can execute anymore, it's where that execution is going to create the most value next.
And of course, just to be clear, this explainer is for informational purposes only. This is not financial advice.